Wow.
Hello and welcome back. I'm Isabella Kaminska. I'm the senior finance editor at Politico. And yes, so you're back for this last stream of today's events. It's called New Frontiers, and it's looking at all the sort of brave new world aspects of AI and so forth. But in this particular session, we'll be talking about finance with John Cunliffe, who's the Deputy Governor in charge of financial stability at the Bank of England. And of course, finance is no stranger to technology in many ways. It's one of the premier technological areas, ever invented. So, but I wanted to start, John, with, what everyone really wants to know about, which is the development of central bank digital currencies, and here in the UK, the digital pound. You testified back in February to the Treasury Select Committee. Oh, sorry, little interruption, but it's okay. So back in February, you testified to the Treasury Select Committee, and you gave the chances of us bringing in a digital pound about 50-50, but personally, you said you saw it more like 7 out of 10. I was wondering, because since then, the Treasury and the Bank of England have been leading a joint consultation, which closes at the end of the month. Do you still rate those chances the same?
Two things. The judgment we formed was that the digital pound was likely to be needed. So it wasn't 5 out of 10, it was likely to be needed, and I guess mathematically likely is more than 5 out of 10. My personal view was it was around 7 when the committee asked. But I mean, the key thing is the likely to be needed. And that judgment hasn't really changed since February. It's a forward-looking judgment. So it's a judgment that would lead to a period now of design and assessment. And we don't envisage taking a decision whether likely has turned into will be needed until the middle of the decade. So it's a question of how things evolve. But the judgment itself in 3 or 4 months, no, that hasn't changed.
Of course, but since then we've seen the Bank of Kenya and also the Swedish government come out and sort of pour cold water on the idea of CBDCs being a necessary thing. And I think there is still a sort of mentality out there in some areas of the financial market that this is a sort of solution looking for a problem. So what are the benefits of a CBDC as you see them?
Okay, so this assessment, this likely to, in my case, 7 out of 10, but say different people could put different numbers on likely, is based on where we see money and payments going today. So there are a number of big trends happening in the world of money and payments. One very big one is the decline in the use of cash, Bank of England money, use of cash in the economy. So now about 85% of our payments in the economy are done through the transfer of commercial bank money.
But notes outstanding are still going up.
Well, no, so there's, and it's not really a paradox. The demand for cash, COVID's a great example. The demand for cash went up, the use of cash went right down. So people, when they feel concerned, want access to Bank of England money. The only way they can have that is cash, and this goes, I think, to some of the results we got from focus groups about what they value in money. One is convenience, but one is security. So holding of cash goes up, but use of cash goes down, partly because it's not usable in many aspects of modern day life. So the more we have internet shopping, the more we have contactless payment and the like. There are outlets around the Bank of England that won't accept cash, or actually I found one that said, we also accept cash. Physical cash is becoming less usable. Our assessment was that certain trends, one is the decline of cash for use in transactions, not for holding as a store of value when you're worried about life. One is the emergence of new technologies that offer the prospect, I'm very clear about this, it's not to me a proven that these new technologies can do this, but they offer the prospect, I think, of much greater functionality in the way money is used. So this is the automation of payments and the programming of payments using digital representations of money. And one is the possible entry into this world of more payments and money issuers who are not banks. And those could be fintechs, and we've seen that in the crypto world, but some of the crypto players want to now cross over into the non-crypto world with stablecoins. And we've also seen proposals from big techs. The most famous was the Libra DM proposal, which has gone away. But this question of new entrants into the provision of money and payments who are not banks, providing a money of their own. You put those things together, and the case for a CBDC, for a decision that will be taken in some years' time, is that those trends are continuing, and that in order to ensure confidence in money and the uniformity of money, if I can put it that way, that people can be confident that whatever type of money they're using, it can always be exchanged 100 pence in the pound on demand for Bank of England money, we would need to provide money in a digital form. And that's what lay behind the likely. There are other motivations to do with competition, innovation in payments, but from the Bank of England point of view, this anchor for confidence in money and uniformity, singleness of money, that people don't have to think, am I using a stable coin, am I using a HSBC deposit, what form of money, what's it worth, that you know that you can always demand to have your money in Bank of England money, and crucially, that Bank of England money is usable in modern life. And as I say, increasingly as life becomes more digitalized, physical cash is less usable.
But how is that really different today? I mean, we can operate entirely digitally. That's what's one of the reasons why we're not having notes anymore, and usage of notes. So, what really does a CBDC what material difference does it make to me as a user's life?
So I had great difficulty convincing the House of Lords of this. I'm not surprised there are skeptics. If you think that we have come to the end of innovation in payments and money, then okay, then what we have now, we can do everything we need to do. There is nothing we need to do. I'll give you some examples of things we might be able to do, but more importantly, and the example I use, and I've used it before, is the development of the smartphone. So when the first iPhone was introduced in 2005, it had a few basic apps, but they were all things you could do on your BlackBerry or on your phone with a camera. It brought them together. I don't think anyone envisaged in 2005 that whole app ecosystem would develop to the point where you could have, unfortunately, if you needed your vaccination certificates, your entry, your form to the Home Office allowing you entry into the country, your airline ticket, all on your smartphone. And actually without that, it was quite difficult to travel. So the question is, and as I say, this is the prospect of new functionality, that by using these technologies, private sector developers will find new uses for them that I can't necessarily envisage. But if we look at the way technologies come together, again, I can use my smartphone along with GPS positioning to develop Uber, and then along with a payments leg to that there actually is another whole set of development to come in this area. Initial things that you might be able to do with it that you can't do now is automate payment contracts in the way that's not possible at present. So we ran an experiment with the BIS, the Bank for International Settlements, has an innovation hub in London. We just ran an experiment with them called Project Rosalind, where a number of different players, a big card company, a big retail platform, a bank, and then some fintechs, tried to play with this idea of CBDC and a ledger that we set up for the purpose to look at things like delivery versus payment. So when I buy something on the internet from Amazon, I pay. If it doesn't turn up, I need a refund, and I have to go through a whole process for those of us that have done it to find the refund form. And so I get the refund, kind of eventually the whole thing takes 4 or 5 days. Could we automate that so that actually when there is a photograph on my door of the package, the money is released automatically, and I do not have to pay in advance, actually, delivery versus payment. The delivery of my package and the exchange for my money happens at the same time. So that was one of the experiments. It's something we can't do at the moment with the functionality that exists in money.
But is it really desirable? I mean, you mentioned Amazon, and I think there was a case recently where someone got locked out of all their things because, Amazon made a judgment call about whether this guy was rightfully using his ring thing or not. Yeah. This uniformity ended up locking him out of his entire house. So there are these huge risks, there's privacy concerns, and this idea of a surveillance state increasingly encroaching. And when you mentioned, the iPhone and the apps, that's come at a cost too, because data has become money, and we are all the product. So, is there a risk? You're in charge of financial stability. Where do you see the risks?
So I think there are risks. There are a number of risks in that question. So I'll try and pull them apart. So first of all, we are not the only people that's thinking about developing. I hate the word because it means different things to different people, but tokenized forms of money that have this functionality. As I say, there are private sector developers out there. There are big techs out there. One of the reasons I think a CBDC might encourage competition is there are two parts to a payment. One is the money that you move in whatever form, and the other is the mechanism over which it moves, the transfer mechanism. And if you want to be a payment innovator, you might not want to be a money issuer. But if all of these digital monies are issued by big platforms like Amazon or whatever, there is the risk of walled gardens. So we know that digital platforms have a tendency to concentration. Think of it in terms of, as a payment service innovator, you won't be able to use a big tech's money unless you actually go onto their platform and they control competition in that way. If we can provide the tokenized money that developers can use, then actually you open this up to a much broader range. Do you want me to deal with the state question, or it's the big question? So the big issue, which is privacy and anonymity. I think to establish trust in a CBDC, we really need to have a big public debate about that, and it's starting with our consultation document.
Have you had any feedback? Have you seen the feedback?
So I haven't gone through. I think we've got nearly 50,000 completed responses. We've got some people who started to respond and didn't finish, and we're not quite sure whether those are completed or not. But I haven't been through them all. But a large number of them, I would imagine.
You'd have to be a machine to go through 50,000 results.
Well, we have some machine learning in the Bank of England, and we might recruit the dog that's walking around outside to help us. But so I haven't been through them, but I imagine privacy will be a huge concern. We need that debate, but it should be a structured debate in the context of what we do now and the balance that society sets between privacy and anonymity. And those are two different things. So every transaction you make with your credit card, with your phone, using your bank account, is recorded and stored. Okay, all of that data is available. We have privacy laws, data protection, that means it's kept and it shouldn't be leaked. Occasionally it's leaked or hacked, and there are big penalties for that. And under certain circumstances, the authorities, law enforcement, tax, but these are circumstances defined by Parliament, can have access to the records of all of your transactions in your bank accounts. And if you want to take out cash above a certain level, you'll find the bank or somebody will ask you questions. And if you want to use a large amount of cash, you'll find you get asked questions as well. So the citizen is offered privacy with protections, but the citizens are not offered complete anonymity. And the reason for that is that complete anonymity has with it the potential for social harms, tax evasion, crime, terrorist financing. So as a society, we've legislated to put that balance in place. What we would do for a CBDC is we would completely respect that balance. The Bank of England would not see any individual identifiable customer data, but the wallet would do the same function as the bank now. It would store all that information in the way that banks store it now, and that would be available to, for example, law enforcement under specific circumstances.
There are so many questions we could go on and ask, but we're running out of time, sadly. I did want to quickly refer to the speech you gave back in April, and it was entitled "The Shape of Things to Come." Which were you channeling H.G. Wells on consciously, or because there's a great passage in H.G. Wells's version, which is, I think he says he envisages what money might have been like in the future. He says, "We register man's earnings and spending as we register births and deaths. Our money is fundamentally a check on the publicly held private accounts, on our privately held accounts." So it seems kind of
visionary, yeah. So I wasn't channeling my inner H.G. Wells, and central bankers don't normally talk about the shape of technology to come. But I think whether we do a CBDC or we don't do one, and I say that decision will be taken in the light of how trends develop and also what we learn about the technical feasibility and whether actually this thing is um, whether the model we've put out for consultation could be delivered. Whether we do that or not, whether we have stable coins or not, whether we have tokenized bank deposits. You mentioned before what's happened with digital platforms, smartphones, social media. I think it's important that public authorities think ahead. We create the optionality to take action, which is what we're doing with CBDC. This would cut down the time to deliver. We put in place regulatory frameworks, because one thing we've learned about these technologies is retrofitting legislation on them once they become established is hugely difficult. And that's kind of what I was getting at with that title. It's our job to think about the future and, if you like, set out the regulatory and other frameworks that deal with likely futures before we're surprised and suddenly we're running after them and trying to catch up.
Well, on that note, thank you very much. And I want to tell the audience and everyone here in IRL, as the kids say, to stay seated, because the next session features an executive interview with Julie Burrell, the Corporate Vice President and Deputy General Counsel for Global Privacy and Regulatory Affairs from Microsoft. And she'll be, and it's Goli Sheikhoslami, our Chief Executive Officer at Politico, who will be conducting that interview. So thank you very much. Oh, sorry, one last word.
I mean, most of you have responded, I know, I'm sure. But our consultation document is on the Bank of England website. The consultation is open to the end of June. So if those here or watching want to contribute to this debate, please fill in the, I know you have, please fill in, everything is recorded, please fill in the consultation.
30,000 words.
Oh, you published yours?
Yeah.
Because it helps us.
Oh, well, great. Thank you very much. So there you go. Get your replies and responses in. Thank you very much.
Excellent.